So welcome everyone. Thanks for joining. Today we will talk about Bre-B and the future of multi-rail payments in Latam. I'm 𝗕𝗿𝗄𝗏. I'm the host of our coffee chat, and together with me we have our managing director, 𝗕𝗂𝗁𝗄𝗏. Thanks, Lynn, for joining.
Hi everyone, good to see you here.
Yeah, and before we start, as usual, just a couple of guidelines that we need to go through. So first thing is that keep in mind that we do publish this material on our YouTube and our website. So if you need to check the content of the slides or what was discussed here, you can also look into our website. We also encourage you to open your camera so we can see everybody. And today we'll have a bit of a change. Usually we say that everybody can open their mic and make some questions, but we would like to test a different thing today. So maybe we can first go through all the presentations. So we'll have our guest speaker presenting the content. You can still use the chat to interact or make questions in the chat, but let's give some time for them to present. And at the end, we will open the floor for everybody to ask questions, and we will have like an open discussion, right? So this will be a bit different. We are trying to test a different format and see how it will be, okay? So moving forward, as you all know, this year, our coffee chat, we are talking about the mega trends that are shaping the payments industry in 2026. We already spoke about B2B payments, and also last time we spoke about AI becoming the gateway to commerce. And today we are talking about the multi-rail world, right? So this first trend that we have here in this slide. And for that, we have two guest speakers. As you know, we always have someone from our side, and today we have Valentina Meneses, which is our senior analyst based in Colombia. And our guest speaker of the day is Walter Campos. He is the General Manager Latam at UNO, which is a global fintech specialized in payments orchestration. So Walter leads the operation team, focusing on growth and relationship with clients and partners. So we would be really valued to have your vision around this topic, Walter. So thank you so much for joining. So to start, I will give the stage to Valentina so she can present the PCMI part.
Thank you, Fer, and thank you everyone for being here. Well, at the first of the year, we present these slides, but I want to talk about how especially Bre-B has evolved. So when we say multi-rail, I want to put this really clear. We are describing an environment in which cards and other kind of payment methods increasingly coexist. So, however, this environment looks very different from one market to another. If we go next in the next slide, we can see, for example, next one. We can see, for example, Mexico and Dominican Republic, how these two markets illustrate different stage of the region of this regional shift. So, for example, in Mexico, the opportunity is to expand SPE into merchant payments, and in the other part, in Dominican Republic, the central bank is preparing to extend these instant payments into retail. But if we go to our new instant payment method in Colombia, Bre-B has rapidly established awareness, for example, and use different news national cases. And what we think could be this next phase, and this is really important, is the new arrival of use cases in more than P2P transfer, beyond a traditional P2P transfer. So at the first stage of Rappi, we're seeing a lot of P2P transfer, and then we are seeing a lot of integration of merchant QR codes into Bre-B, payroll-related developments, and B2B online payments. And for Colombia, our prediction is not that Colombia will replicate Brazil's exact path, but Bre-B has the potential to follow PIX-like direction of travel. And other markets, for example, are developing their own version of this transition. If you go on the next slide, Peru, for example, offer a different view of this. In Peru, 𝗕𝗂𝗁𝗕 has become the central part of these consumer digital payments. And we are seeing that as low ticket usage continue to grow, account-to-account transfer are likely to play an increasingly important role within the wallet ecosystem. And if you go forward and see how Brazil shows us what can happen once this ecosystem reach maturity. If you go next slide. Yeah. The next one, I think. Yeah. So as you know, PIX is the dominant part of everyday payments in Brazil. But in this case, the competitive question is no longer whether consumers will use PIX. The question is how financial institutions and other providers can make money with this engagement. So these markets are not moving at the same path, but they're sharing one structural direction. Account-to-account payments are becoming increasingly relevant in everyday commerce. So if you go to the next slide, take a close look to Bre-B, and we can see that its user base and transaction activity has grown pretty quickly, but the scale is just one part of this story. The key question here is how people are using it and whether it's moving beyond transfer into everyday payments. So, and the early P2M data give us an indication of this stage. So if you go to the next slide, you see how this P2M, thank you. These P2M payments already present a meaningful share of private transaction. But for us, the important takeaway is that merchants' payment create a different type of engagement. Once the same rail, in this case Bre-B, is used to pay the store online or are integrated into QR codes, it becomes embedded in recruitment payments behavior. So this also, and I wanted to be clear about this also make merchant and SMEs much more important stakeholders for Bre-B or for any Insta payments in the next phases or in how people will use it. And Brazil, for example, provides us a useful reference for understanding how significant that the shift can become. If you go to the next slide. Yeah, thank you. PIX here shows us that this shift from P2P transfer to merchants to P2M transfer takes time. At least I think it took around for PIX 5 years for purchase, take over P2P transactions. So as merchant adoption grows, SMEs become increasingly important because payment activity can translate into deposits, data, access to financial service. And I love question, and I want to leave you this question. This brings us to the central competitive question or key thing takeaway. Who actually wins as fully RTP systems scale. And just to help you to shape the answer to this question, if we go to the next slide, we can see that public payment rails create value beyond transaction fees. For example, with PIX in Brazil, institutions like banks and other financial institutions gain things like deposit, got stronger in SMEs relationship, gather, for example, account primacy. If you go and see how 𝗕𝗿 is developing, 𝗕𝗿 merchants QR code integration suggests that banks in Colombia are following the same direction. So the answer may be the winner is the player that becomes the customers or merchants' primacy financial platform. And that maybe reflects a wider shift in industry economies. If we go to the next slide, we can see what was happening in a card-centric system versus a fully RTP infrastructure. So in a card-centric model, issuers, networks, and acquirers capture value through interchange or merchant fees and transaction volume. But in a fully RTP infrastructure or system, these chains, the chief are more strategic. The value is in deposit, account activity, and credit, for example. But this is really key. Cards do not disappear. Of course, they do not disappear. They become one part of broader multi-rail system. And to close this part of the coffee chat, I would like to leave you with one takeaway and one question. And the takeaway is more rails create more customer choice and potential better payment economics. But they also create some more providers, integration, settlements flows, failures scenarios, and reconciliation process for merchant. In other words, create fragmentation. And how should the question I want to leave you is how should each participant respond to the shift? And if you go to the next slide, I want to give you with Lindsay that can help you to answer or chip this answer.
Thanks, 𝗕𝗿. So, hi everyone, great to be here. We have people coming to us almost on a daily basis asking us about the impact of 𝗕𝗿, what we should be planning for, how do we, prepare, should we have a defensive strategy, a proactive strategy? And the answer to that really depends on what you're trying to accomplish in the ecosystem. Are you trying to own, for example, deposits? Are you trying to own the user experience? Are you trying to enable multi-rail? Are you an enabler in the ecosystem, wanting to enable merchants and consumers access to multi-rail payments? Or are you trying to optimize, more of a defensive strategy? Are you trying to optimize protect your existing flows, optimize for margins, or for a merchant, optimize operational complexity? So the first step to answering that question, of course, is figuring out, okay, what am I trying to achieve at a high level? And then what are my strategic actions that are possible? What are my options that are possible in this ecosystem? And so where PCMI comes in is we, of course, execute research, primary research to get answers of what's actually happening on the ground, and then convert that into strategic direction for you. And one thing that we see moving really powerfully is on the financial services end. Anyone who captures deposits is in a very strong position right now to produce innovation, to achieve account principality, and to digitize flows that have never been seen before. Okay, with economics starting to shift away from fee-based economy towards a deposit and financing-based ecosystem. That's what tends to happen over the long term in an A2A enabled environment. From a merchant perspective, and we're going to hear from Walter in more detail here, you really have the opportunity to access consumers and purchase flows that have never been included in the digital economy before. But of course, that comes with all kinds of complexity. And the question is, how do I prioritize what decisions do I need to make? How do I prioritize those decisions? And which providers do I partner with to really optimize my performance in Colombia or any emerging market where A2A solutions are scaling? All right, so with that, I'll turn it back to Fer and Walter to go into what Uno has to share with us.
Thanks, Lynn. So just sharing the screen here. Yeah. So Walter, the stage is yours.
Hi guys, my voice today is not the best, so I starting apologize too much business trips and events. Right now I'm in an event in Rio, but I'm super happy to be here to be discussing this with this group of people that know a lot of payment, banking, financial service. So the idea here is share a bit of information and also hear you guys out and go from there. So if you could pass the first slide, please. So here it's like, I mean, in Latin, for instance, it's changing for a long time. We are looking now, we are say A2A wallet, but everything happened even in the past. Like if you see, like the banks in the past, we had like the bank transfer doing the same thing. We had the what we call in Brazil boleto, the bank slip. I think the technology is changed, but the necessity was all the time there. So that thing of having Latam only a card rails, that's not true anymore. You have like instant payment, wallets, BNPLs. So everything is evolving here. That's not new for anyone here. And for the merchants, fintechs, banks, anyone that's within this ecosystem, everything get more complicated. Is more integrations, more reconciliations, expansions. This is a reality. This is not something that we can't hide anymore. Next slide, please. And then it's the word. Like when people ask me, Walter, what's really similar in Latam everywhere? Fragmentation. Because we can't guess with each kind of payment method or in which rails the user will be doing that transfer or purchase. Try to guess that, it's almost impossible because you have many different realities. So maybe it's a young guy like my son, he uses a wallet, and for him the wallet it's the relationship he has. If he uses a wallet, he uses a lot of Pix. But when he has credit, he goes for the credit card. So those things they are combined. I mean, there is no one part winning and other part losing. In my opinion, we are fitting every single space that the most important part of all ecosystem that is the client or the user is asking. So for me, when people say, Walter, what's really common everywhere in Latin America? Fragmentation. Next slide, please. And then we start to see different numbers. And we intend to say, this one is better than the other, but it's not that. The reality is they complement each other. So those numbers here, they are external. This is not from Uno, only a note here is external reference, only for us to have a look. So we'll go and say, local acquires, approval rates in Latam around 60 to 80. When you have a cross-border PSP, 20 to 45, but that's average, can be higher. And then when we go to Brazil, APM 40% of the market share. Sorry. I will change the role here. You know where is it?
We can still see you,
Sorry,
Walter,
guys.
so no
I'm
worries.
in an event, so I'm trying to find
This
a
is a
room.
first. We're getting a real-time look at wherever you are, so
So sorry about that. So if
you're
we
good.
go, Sandra, if you keep there, like someone changing that. So basically, if we see here, and then we have A2A in Mexico, 10%, Colombia already 25%, Chile 12% for cards. So it's a composition. I mean, for me, there is no winner, no loser here. It's important to have everything. Next slide, please. And then when we are looking to like the complexity, the first wave you have, and that's what we were discussing, Valentina was saying that. So, well, what's going to happen? We are going to have a Bre-B only for P2P transaction, or merchants will use Bre-B as a payment method. Yeah, that's a natural path. So, but the first problem is like, it's easy, like, let's talk about Pix. There is a lot of correlation between Pix and Bre-B. Even like the curve, the way that, for sure, Bre-B it's quite new. It's end of 2025. Pix was launched 2020. So you have more mature rails already and everyone using and users and rails. But the problem is there is a technical integration in between. This is the first wave. And then you have to start to routing those logics, what the user will choose. And then you have to combine all these conciliation. Oh, so you have cards, wallet, if you're a merchant, you have card, wallet, or if you are a fintech that is pay in and pay out, you have cards, wallet, A2As. And then you have to start to have a retry problems because you want to approve that transaction and fail, for instance. And every single Rails in a moment will fail. It's natural. You have to have backups, retrials. That's it. So this is what happened naturally. Could you pass to the next slide, please? And then there is a question, especially not only for merchants, because in this sense, UNO is a global payment infrastructure. So it's not only merchants connecting to us, we have banks, we have fintechs, we have PSPs. As we are a SaaS infrastructure, you can choose build your own infrastructure or buy it. And then there is no right and wrong path. There is benefits or not. So here, when you go for doing your own infrastructure, you have like engineers diverted from core product. Every new integration, it's a new effort. You have to months to work all those integrations, and you have to maintain this forever. And basically, guys, never ends. Like I was telling to Fernanda, she's Brazilian, I'm Brazilian. My first work here in Brazil was getting the manual POS. I don't know if you guys remember the more experienced one. They remember like we used to scratch the cards with a paper to do a transaction. So if you see payments and financial service, never stop. When we think that there is a new payment method, there is a new rail, there is new way of connect. So you can do it your own, or also you can buy these as a SaaS. So every rail and market's already there. It's only a configuration. This is plug and play. You just configure a new payment method. You go live within days, not months, and basically all the complexity this platform can absorb for you. Next slide, please. And then we have some figures here, like this fragmentation is not only related to the payment method, or not only related to the rail, because you have methods, providers, and understand here, providers, banks, fintechs, anything, countries, and you need to combine all of that, because if you're even that it's an A2A transaction, you're going to do some kind of know your customer validation of your user. Most of the time you have this obligation. It's compliance. You need to do it. So when you combine all of that, it's years of integrations, and that's why I think sometimes merchants and banks and fintechs, they think, what should I do? Should I integrate this now? The question comes because it's not difficult if you try to do one by one yourself. And an integration normally takes like 3 months with key A and everything. Next slide, please. And then comes like the problem here. Managing multiple rails isn't a tech problem anymore. It's more a strategic discussion than a technical problem. For sure, you need to do the integrations to be up to what we have of more modern payment methods or rails. But it's more, there is no right and wrong answer here, because we have a lot of merchants and fintechs and PSPs and banks. They use part of their services through payment orchestration or payment infrastructure, and they do part of their service through their own infrastructure. So there is no, but normally they intend to send all of this to infrastructure like a payment orchestration. So it's a discussion. It's more strategic than a technical discussion. Next slide, please. And then some benefits here when you are doing through an orchestrator. First of all, unify access to payment methods. So you have only one view. Most of the time when I'm talking with merchants or banks or fintechs, they have a lot of work doing reconciliation. They cannot see approval rates easily because the rails, they send different answers. It's like, and like at for instance, we normalize all the response we receive. So you do a click, or you ask our payment concierge, it's an agent that we have within the platform, and the platform will say, hey, Fernanda, Lindsay, your approval rate this month was X%. So that gets super simple for decisions and where you go. And then you go for the smart routing that for sure are more related to cards, but also for A2A. When you say, Walter, but do we need to smart routing A2A? Yes. Why? Because you still, even though you can be seated in a central bank infrastructure, for sure, if the central bank infrastructure goes down, everything is down. But you have providers, and those providers, they have some problems sometimes. Normal technology. So in those minutes, hours, days, you have those providers down, you can smart routing and do the redundancy and never have your rails down. So that's why important, even with A2A, I'm here to talk about purchase. I'm not talk about peer-to-peer, but even peer-to-peer, if we need to help, we can help in those rails. So that's the importance here for card, but for any payment method, you need to have unified access to payment method, smart routing, redundancy, faster expansion, and better visibility. Change your life, how you manage your business. Next slide, please. And then some figures, yes. What happened when you orchestrate payment method? Here is more related to cards, and then I can talk about A2A. In cards, as you have some deny, when you start to do the orchestration, you can uplift your approval rate from 5 to 50. I've seen merchants like increasing 30%, but it depends how mature your operation is in terms of online payment. And also you can decrease costs because you have more opportunities, more providers, different payment methods, so your take rate can decrease. Those are general figures, average from 5 to 15, decreasing take rate 50 basis points. Next slide, please. How this happen? Basically, I'm here doing an example, like you have 1 million transaction, as example, 1 million transaction a month, and then you do the retries, the transaction that you can retry, especially in card, and then you may ask now, but Walter, how you retry A2A? I give you an example. If I'm sending a transaction to a partner, to a provider, and for any reason this provider is down in that moment, I can identify that and send to the next one and stopping trying, for instance, to generate QR codes that are having problem to being generated. So even that we are saying here some figure for cards, for A2A is the same thing, it's the same logic. Maybe the uplift will be smaller, but still have a lot of uplift into to have this infrastructure with redundancy. So here it's just like a example that if you retry transaction with cards, you can make like 1 million transactions merchant. If you have an AOV of $30, you recover 5%. We are talking about 1.5 million. So it's a lot of money that are coming back to the client. Next slide, please. And then again, it's not cards versus A2A. It's not cards versus A2A or versus wallets. They are all part of a big ecosystem, and they exist to cover areas that one is not covering. So basic, like I give you an example. If you see Bre-B or Pix or any A2A, the micro transaction, the very small AOV, it's getting for sure more used because you don't need credit for that. You have funds in your bank account, on your wallet, or anywhere, and you can transfer. But when you don't have credit, you use credit card. When you need to have you have a other service around, you use a wallet. And guessing that, it's super difficult. That's why, in my humble opinion here, like if you're a merchant or if you're a fintech that has pay in, pay out, or if you're a bank that pay in, pay out, you should offer as many payment methods that you can do it, because you're gonna cover more users case. So here I'm showing that even though approval rate for cards can be smaller, in higher AOV cards go
This is from
better.
the Yuka.
Sorry, guys. Any question here? Okay. Next slide, please. And then we go and see Bre-B here, like some figures, like external figures from Banco de la República. So they are growing. It's like in 7 months, they tripled the volume. Oh, Walter, how that's going to happen? Exactly what happened, in my opinion here. I cannot foresee the market, but I think it's going to happen exactly what happened with Pix. First, we start to send money to each other. And remember, we used to do that in the past through bank transfer. For sure, we used to use more debit card, but it's a behavior. And then that will be captured as a purchase in the checkouts. And then you start to have a different types of A2A, recurring payment. And then you'll be connecting recurring payment A2A with contactless. And then you're going to do like, so everything's going to happen naturally because there is a normal opportunity there. So the number itself, it's amazing what what we are doing in Colombia, and it's important. If you're a bank or a fintech or a PSP or even a merchant, have a look into that, go deeper, because it's trendy and it's happening. Next slide, please. And has a big approval rate, and that's average. And it's not one against another. It's not cards versus A2A. They complement each other, but it's already 25% of the volume in terms of payments. At least that's the figure I could get. It's quite new because was launched end of 2025, so it's going naturally growing. Next slide. And we have another example, 𝗕𝗂𝗁𝗕, PSE, wallet. So we 𝗕𝗆𝗵𝗕, we have everything in this ecosystem. Sorry, guys. And then here are some figures like Brazil. It's even higher than 41% Pix market share already. But cards, they still growing. When we go to Mexico, 10%. When we go to Peru, 34%. When we go to Chile, 85% cards. When we go to Argentina, 30%. Mercado Pago ecosystem is enormous. So those are the combinations, and for sure, call the attention, the approval rate of A2A, but also it's important to see the AOV, where when you have a credit or a credit card, you have a bigger AOV. So those things are combined. Next slide. And then the question is no longer card versus A2A. It's how fast you activate both things. How fast you have everything in your checkout or everything in your ecosystem. Because, I mean, try to guess how the user will pay. It's quite complex. For instance, only Brazil, we have more than 200 combinations in between payment methods and providers and partners. Only one country. If I look into APIs, and I look at fraud prevention, know your customer APIs, 3DS, card scheme products, and I see all of that. We have more than 3,000 connections, APIs live right now in one country. So the point here is super fragmented. What you do, you get someone to facilitate all this complexity of integration that would give you a business advantage to look into your business. Meanwhile, payment goes more seamless. Next slide. And then thank you. I will also thank you in Portuguese, obrigado. And I'm here open to discuss and hear you guys out, and and learn with you guys. And I mean, I'm not saying that what I'm bringing here is the absolute truth, but I'm saying the things I see in the daily base, like going around Latam, and I'm very positive. I think we are going every single day consolidate all those payment methods, all those rails, and I believe, and that's inevitable, because the Z generation, they want that, and those are the guys that are receiving right now. My kids receiving right now $68 trillion from the millennials. They are receiving this money because they will be buying. And I think I'm very positive. I think the whole ecosystem will connect in a sense that we are going to have a very big global payment infrastructure networking. That's what I believe. Thank you, guys.
Thank you, Walter. That was really great. So now, guys, we will open for some questions. I guess we also have one already in the chat, so we can start with Alison. So, Walter, why isn't the approval rate higher for Bre-B A2A? Seems low in the 80s. Is it closed accounts, insufficient funds?
I mean, who made the question? Alison, how are you? How are you, my friend?
Good to see
You are
you.
here.
Yeah, I just wanted to check because on A to A, typically we see a higher approval rate.
Yeah, it was A to A.
In
Yeah,
other
it was
markets.
Yeah, you're right. I mean, I'm saying like when depends on the way you're integrated that, but I was comparing here cards with A to A, but you're right. Like A to A is going to have supposedly to have a higher approval rate.
Yeah, like in the
That
90s, I feel like, right? And then also it's I guess it's the way not necessarily approval rate, but conversion rate, right? It's not really an actual approval, it's more conversion.
yeah.
Okay.
The authentication when you have A to A, and then Alison knows a lot. When we have A to A, it's super simple authentication. We are going to go. You're going to reach the central bank. You're going to reach the provider. You're going to reach the bank account. Boom, boom, boom. So it's super simple. So if there is funds there, the approval rates is there, and conversion rate also.
Thanks.
Okay, Walter, I also have a question about Bre-B. I know the story is quite clear, right? So we see that it's growing really fast, already 87% penetration of the population. But as we saw, it's mostly P2P for now. And then what do we need to change to become like really for e-commerce rail and P2M? Is it like more development of use cases? Or is there anything that merchants are concerned, or it's just a matter of time and it will be actually like faster than Pix?
Is there any Brazilian here besides Fernanda? If there is Brazilian here, great. Let's. For me, it's super simple to explain. I mean, I don't want to guess or foresee anything here. But like Alison, she knows a lot about this. So what's the point here? I think you start peer-to-peer because it's done. I go to my bank, I have a bank account, or I go to my wallet, I have my account there, or I go to any kind of other business and I have my account there. And then I can send this to anyone. So as I can send to anyone, it's going to be natural increase first P2P. And then secondly, you start to get used to this payment method. It's in your life. Like if there is Brazilians here, in Brazil, we don't say, send me money. We say, send me a Pix. That's very simple nuance here, but it's completely different. It's so strong that it's culturally embedded in our society. What happened, though this same consumer go to a supermarket and go to the cashier and say, I want to buy with Pix, or I want to buy with Bre-B. And that cashier, that supermarket has to manage that. They go to a marketplace and they say, okay, but now I want to buy with Bre-B. Where is Bre-B? So those integration will happening naturally, and we will start to see peer-to-peer and purchase at the same time. It's for me, it's a natural path, but if you guys has a different opinion here, it would be great to share and discuss.
Well, yes, I have a question. When we are talking about especially e-commerce, remote purchases, so you're nowhere near the actual merchant itself, then the game changes because now you're talking about the need for a purchase guarantee and dispute resolution. And that's something that credit cards have. Debit cards don't, but credit cards have. I can see Lindsay smiling because I bring this up almost every time. Do you have plans, because the transition from B2B and from P2P are simple transfers. Do you have plans when you get to a purchase? Because that is a different game.
Normally, and then normally, I don't know exactly. I can get your great question, Nick, first of all. And I can get your question and then answer it. I get your contact to answer it with details here. I don't know exactly about Bre-B in Colombia, but in Brazil, what happened? The central bank issued a way for this user, if he feels like someone did a fraud or that purchase or service was not delivery, there is a mechanism that you can open a dispute. And you do that through your bank, or you do that through your wallet. You go there and say, oh, fraud list took over my account. And so those are mechanisms that they will appear. I don't know exactly at Bre-B here, my fault in this sense, but the market will issue a way of doing that to protect this online transaction from fraud. Basically is that. I don't know if I answer you, Nick.
Yeah, well, it's very difficult to try and add something later. The complexities involved in B2B and P2P are huge. And the work that's been done, I mean, 𝗕𝗄𝗄 was amazing when it came out. It really was the best that was out there. When you get to a purchase, it's exponentially more complex because you're talking about two parties that don't know each other doing a transaction that has to be completed in seconds. And so resolving things after, you've got to do all of the fraud prevention in that moment of time. But then you have fraudulent merchants and you have fraudulent customers as well. And dealing with all of that is, well, you said that they're doing something with 𝗕𝗄𝗄. Does the central bank really want to have to deal with that? Because they're taking on the responsibility.
No, basically, they wish the regulations and the issuers of those accounts, they have to comply. So since the beginning, the mechanism to complain as a user was there. So and if you need it, you have a channel to go. Normally, you go through your bank or you go, you can complain. So you're right. I mean, even though that it's a simpler transaction in terms A to A, in e-commerce, you're still doing, your customer, you're still doing fraud prevention. That will happen. And now it's changed. Now you need to do fraud prevention, and in few months or few days or whatever, you need to do fraud prevention for agents, because it won't be us buying, it's going to be the agents buying in our behalf. So fraud prevention and know your customer always will be there, independently of the rails you're using.
Well,
I don't know if
yeah, the way that the card company, everyone here is familiar with the way that the credit card companies did it, is if you wanted as a bank to be an issuer or an acquirer, you have to agree to the rules of the game, and that includes accepting the responsibilities of the purchase guarantees and dispute resolution. And then if you get a card, you have, or you're a merchant, you have to accept those responsibilities from day one from the bank that is providing the service to you. So it has to come from the top, which means in the case of 𝗕𝗄𝗄, it has to come from 𝗕𝗄𝗄. Here are the agreements. If you want to even play, you have to play by these rules.
Yeah.
So anyway, I didn't want to overtake the conversation.
But Nick, those rules exist.
Okay.
And they are and they like, if I'm a user in Brazil and I need to open a dispute, I will open. Existing, it's there. Okay.
Okay. So guys, I don't know if I was clear enough, but now you can jump in and ask questions. Don't need to use the chat. The chat was just if you had something while 𝗕𝗄𝗄 was presenting, just to not forget, you could go in the chat. But also, like 𝗕𝗄𝗄, we have a very interesting question from Andres here. So would large e-commerce players such as Mercado Libre, Amazon, Shopee, Magazine Luiza build their own orchestration solution or go and contract payment orchestration solution providers?
Can be both. And I mean, what we are seeing for the I'm at the company for the past 2 years. What I'm seeing, as bigger you are, becomes more complex. Why? Because you have different countries, different regions, different payment methods, different reconciliations, different features that you need to. So it can be both. I mean, we have, but naturally, most of those big guys, they have their payment orchestration sometimes. Sometimes they are in a half of their building those things. Sometimes they are missing some features. Sometimes they want to change. So there is many ways of connecting to a payment orchestration, but it's more, the question is perfect because as bigger you are, more complex everything gets to you. So doesn't matter here the brand of the company. We have like big, amazing companies that can do it internally, and they are using our infrastructure right now.
Yeah, that's clear. And also there's another great question from Andres too. Could you use AI to build internally a payments orchestration solution within your own e-commerce platform? How difficult or half-baked solution would you end up coming with this vis-a-vis contracting this out of a vendor who focus on it?
Okay, where's this question?
It's in the chat.
I mean, if the question is if AI helps to build code, for sure. I think everyone here is using AI. What changes now is instead your developer is looking only or coding, they are also managing agents. What's super complex as well. So I think, yeah, you can, the discussion of going directly and connect a new payment method, or go and connect an infrastructure that has all payment methods, always will be there. It's a matter of timing. I give many examples. Like we have big merchants, regional and global. I go there, Sergio. I already see your hand. That they go and they have many payment methods, but they left to the end to do wallets. The wallet. So they have one or two, but they are missing 3 others. And they never can fit those 3 others wallet. So with the AI or without AI, they have a lot of difficulty to fit this in their roadmap. It's a discussion. That's the discussion we do on a daily basis. We sit down and say, guys, where's the pain point here? It's here. Okay, let's connect this part. And here, and here. When we see they migrate most of their volume to the same infrastructure because it gets easier for them. I don't know if I answer it. Yeah, you can develop. We are developing. We are not even a AI first company. We are culturally AI company. Everyone, I code. Everyone code in a sense at Una. So yeah, Sergio.
Everyone, Sergio from Spotify. As you may know, we own a recurring business model. So my question is about that. What's your perspective, or do you have any insights on how Bre-B is performing for a recurring business model, meaning MI2 transactions? And I'm asking this one because not all APMs are performing good in terms of these recurring transactions. For example, Pix is not doing good in terms of retention because of the ability for us. We have some limits to retry or to do pre-authentications. So in that sense, do you have any previous experience with other merchants doing this kind of transactions?
Oh, that's a great question. I mean, there is many things here. Let's start with data. Spotify, for sure, you guys have a great structure there, and it's easy to see data and everything. But right now, I'll give you an example. I have two in our company, and we have two agents. One agent is called Payment Concierge that was launched, so I can send to you, sir. This guy is looking everything right now. He's looking even the rails, the retries, everything. These guys can bring us a lot of insights where to change to get a better approval rate. Doesn't matter which payment method. You're right. When we go for APMs, we need to sit down with the APM, with the merchant and ourselves, and keep finding little changes that can improve that. Can be more data in the transaction, can be the timing we are sending this transaction, can be anything. But you're right, that is a challenge there. How we do that? Collecting data and acting fast. This is an example. Another thing we have here, and also a product that we are serving our merchant. Right now, we have an agent that when the transaction fails, this agent talks with the user through the official WhatsApp of the merchant or through a phone call. And it's super crazy because this agent talks with Sergio and goes, "Hey, Sergio, I saw here that your transaction failed." And he starts to have a normal conversation with you. Can be a security code that he placed wrong. Can be anything. So our merchants are using those agents to understand exactly and act exactly what you're saying. We have a big merchant with recurrent payment, and when they try to do to send the transaction to be approved, they are learning a lot with those agents, timing, if they should shut down a payment method or not, if they should place an agent in between to call the merchant. So there is many things. Like I would be, if you give me the opportunity, it would be great to have a conversation with you only for us to discuss that, because it's a big problem. And in a company like yourself, every 0.1 that we recover is super important. I don't know if I answer you, but we are using AI to help us to find the sweet spots. And as is plug and play in a payment orchestration, the guy changed the route that they made in seconds. For you to give you an example, this is super simple. Example, we are processing a transaction with a normal token. If I want to process a transaction with a network token, it's a click. Wow. And then you increase 5%, 10% your approval rate. It's a click. In the past, you had to program that. You had to code that. So it's not a matter of data. It's data and speed and apply this data real time. I don't know if I answer you, man. It's a work to be together. We need to see the data together and filling the puzzle. But yes, there is a way of doing that. We have a big sold 3 or 4 merchants doing that right now, using agent, using our infrastructure to find sweet spots and approval rate.
Thank you so much.
Thank you.
So guys, we are running out of time. So this was really nice discussion. So Walter, thank you so much for being with us today. It was a pleasure. And guys, thank you everybody for joining. We'll see each other in July in 1 month from now. So after the World Cup ends, then we come back with the coffee chat session.
Thank you, guys. It was a pleasure.
Thank you.
Nice to meet you
Bye.
all.
Thank you, Walter.
Let's
Thank
connect.
you.
Thank you, guys.